All right, welcome to your Monday market briefing. We've got a lot to cover, and honestly, it is a wild day out there. We're seeing a pretty big shakeup. Tech stocks are getting absolutely hammered, and it looks like investors are heading for the hills.
Yeah, but it's not all doom and gloom, Alex. While those high flying tech names are down, some of the old school safe havens are shining. Plus, we've got a huge story from a fintech player that could, completely change the banking game. So let's dive right in.
So, the big headline today, it's all about a massive shift in mood. That risk-off feeling is back, and it's hitting hard. The main driver seems to be these renewed fears about an AI bubble. You know, all that excitement and optimism from just last week? Poof, it feels like it's just vanished. You're absolutely right. And what's interesting is where it's hitting the hardest, right in the market's hottest spots. We're seeing this huge wave of selling and all those risky, tech-heavy assets. It really does feel like a crisis of confidence is setting in. Let's put some numbers to that. The Nasdaq, the big tech index, dropped 1.7% today. But honestly, that number doesn't even tell the full story. The really important part is that this is the third straight day of losses for anything tied to AI. So this isn't just a one-off bad day anymore. It's starting to look like a real trend. The momentum has definitely flipped. And that really brings us to the million-dollar question, right? Is the AI spending boom finally over? I mean, this sell-off didn't just come out of nowhere. It really kicked off after we got some pretty disappointing guidance last week from heavy hitters like Oracle and Broadcom. And now investors are getting really nervous that maybe, just maybe, that corporate spending spree on all things AI is finally starting to slow down. And, that chill is spreading. It's not just contained to the stock market. Over in crypto, Bitcoin just broke below a really important psychological level, $90,000. For weeks, that 90K mark was seen as this solid floor. Now that it's gone, well, there's a whole lot of uncertainty swirling around. It's just such a perfect example of how connected everything is, isn't it? The fear in the tech sector is spilling right over into crypto. It's like a domino effect. All those crypto-linked stocks got crushed today. And now, pretty much everyone in that space is just holding their breath, waiting for the next inflation report, and hoping, really hoping for some good news. Okay, so when you see a situation like this, the big question is always follow the money. If it's flying out of tech and crypto, where is it actually going? Where are people putting their cash to find some safety? Well, it's the classic playbook, Alex, a flight to safety. We're seeing this massive rotation. Money is pouring out of those high-growth, high-risk plays, AI stocks, Bitcoin, and it's heading straight for the traditional safe havens. We're talking about things you can actually, touch, like precious metals and hard industrial assets. And the number one winner in all this chaos, no question, it's gold. The price just surged to a near record high today, and it makes sense, right? You've got two things going on. The Fed just cut rates, which makes something like gold that doesn't pay interest look a lot better. And two, you've got all this economic uncertainty. When things get shaky, gold is the ultimate security blanket for a portfolio. And speaking of tangible assets, there's another safe investment making huge waves. Get this number, $7.4 billion. That's how much Korea Zinc is planning to spend on a new minerals refinery right here in the US. Just a massive investment. And this is so much bigger than just one factory. This is a huge geopolitical play. The strategy here is massive. First, they want to lock down supply chains for critical minerals that aren't in China. Second, it's all about accelerating that onshoring trend of bringing manufacturing back home. Apparently, this deal even has the backing of the incoming administration, which really tells you this is part of a global race to control real physical stuff. Okay, let's shift gears for a second away from all the market chaos, because there's another huge story brewing in fintech that could be a massive game changer. We're talking about PayPal, and they're making a really big, really bold move to become, well, a bank. So the big news is that PayPal has officially filed for a U.S. bank charter. Alex, can you kind of break down what that actually means for everyone listening?
Yeah, absolutely. Think of it like this. This charter is the golden ticket. It's what lets them go from being just a payments app to a full-on, federally licensed bank. It's a huge deal. It would let them offer way more services like loans and other things you'd normally go to a traditional bank for.
And what that means really is that this move puts PayPal on a direct collision course with the big guys. We're talking your Chase, your Bank of America. This could completely reshape the entire financial world, pitting the old guard of banking against this new wave of fintech. It's a potential game changer for sure. So when you step back and look at it, it's a market that's totally split down the middle. On one side, you have fear driving this huge tick sell-off. And on the other, you have investors running for the safety of things like gold and other hard assets.
It's a really fascinating split. And, with all this chaos on the charts, maybe we should look somewhere else for guidance. How about we check out today's investment fortune for Tuesday?
Okay, let's see. First up, if you were born in the year of the snake, you're in luck. It says, chaos is your ladder today. While others panic sell, spot the hidden gems. Gold and defensive stocks are your best friends. Huh, sounds like a good day to stay calm and find some bargains. All right, but a word of warning for the roosters out there. Yours says, don't get cocky with buy the dip today. The market sky is falling. It's a day to stay in the coop and protect your nest egg. Yikes. So maybe not the best day to try and catch a falling knife, huh?
And that is all we have for you today. Thanks so much for joining us.
Yep, we'll be back tomorrow with your next market briefing. Until then, stay safe out there.